Hello everyone, this is Rajiv Nair, Senior Manager from ICICI Securities. I welcome you all to this edition of Investonomics. In Investonomics, it's a leadership and flagship product whereby we invite market experts to understand their perspective for consumers on various topics like investments. And today, in order to understand it better, we have a veteran speaker, Ms. Roshi Jain, Fund Manager from HDFC AMC. Welcome, Roshi, for this Investonomics event.
Thank you.
So, first thing first, since last year, we have seen a bit of volatility in the market. That's current year, we are getting it with the rate hike cycle. So, can you give a little bit of orientation how the markets are shaping up in terms of the flight of the capital, equity market sentiments, anything which is coming on the top of the recall? And of course, we'll be forcing a budget as well.
Sure. So given that equities is a long, I think we need to focus on the medium to long-term drivers as opposed to taking a short-term view, more so for a product like the equity-linked savings scheme, which comes with a 3-year lock-in. In the shorter term, I think equity markets can be volatile as most central banks, including the RBI, have taken steps to bring down inflation by raising interest rates, as well as going in for withdrawal of surplus liquidity in the system. The transmission of rate hikes through the economy, as well as the tightening of liquidity, will impact the economic activity in different sectors, with, of course, differing time lags leading to a potential growth slowdown. However, I think we have to balance this with the various long-term opportunities for the economy. I think conditions are favorable for a pickup in private sector capex. The economy will benefit from a favorable policy regime towards domestic manufacturing, policy support for clean energy and green technology. MNC is looking to diversify their supply chains. At the same time, we have corporate, household, as well as banking sector balance sheets, which are pretty robust. And, structural factors do work for us: a growing working age population, rising incomes, demographic dividends, greater penetration of goods and services. I think that continues to provide a favorable backdrop for corporate India. Therefore, I think amidst the volatility, we should be disciplined about stock and sector selection rather than being very tactical or fearful amidst the volatility that is likely to continue, I think, given some of the shorter term challenges. As far as events such as the budget, etc., are concerned, I think, by staying focused on some of the longer term drivers, I think that should hold us in good stead, because as we have seen, the budget generally is or follows the policy framework that the government has laid. And we do see a favorable policy regime towards domestic manufacturing. We have seen the government's intent also towards fiscal consolidation. So I think, the budget should hopefully take this policy agenda of the government ahead.
Okay, so while we get in right now into the last quarter of the financial year, of course, people must be exploring a lot of tax saving instruments, of course, in order to get the benefit of that. So amongst all the avenues available, ELSS is one of that. Any 2 points theories on that where you like to get in?
Sure. So I think, of course, investors have various avenues to save tax via investments, allowed under Section 80C of the Income Tax Act. We do believe that the ELSS, or the equity-linked savings scheme, has an edge in terms of wealth creation. We believe that over the longer term, equity market returns are correlated to corporate earnings growth, as evidenced by historical returns from the market. Even after the interest rate hikes witnessed recently, interest rates on, the Public Provident Fund as well as tax-saving FDs, we believe are lower than India's projected nominal GDP growth. And why do I say projected nominal GDP growth? Because I think that can be considered a broad proxy for corporate earnings growth. So therefore, while equity market returns can be volatile, I think those investors who have a longer term horizon and a risk appetite for volatility, I think the ELSS on balance is an attractive opportunity. Also, the ELSS does have a lower lock-in period of 3 years as compared to some of the other tax-saving avenues. And so that also provides a little bit more flexibility with respect to, the equity-linked savings scheme.
So HDFC Tax Saver, which you in a way look up, have a long history of tax saving. This thing, it's a pretty old fund. So could you please elaborate a little bit on how the fund is positioned? What's the stock picking styles what you follow while you construct the portfolio?
Sure. So yes, you are right. The HDFC Tax Saver has a long track record of more than 26 years. Over the years, HDFC Tax Saver has witnessed various market cycles and has created wealth for investors. The NAV of the HDFC Tax Saver has grown 206 times since inception, which actually implies a very, very robust 22% CAGR returns.
Absolutely.
In terms of the investment framework and the philosophy, our investment framework adopts a long-term strategic approach to portfolio construction. We are focused on good quality companies, but we want to buy them at reasonable valuations. Therefore, valuations are a very important input for us in our stock selection. And we do believe that the current scenario does afford an opportunity for bottom-up stock picking for the longer term. In terms of positioning, you will find the portfolio has a good combination or a diversified exposure towards both domestic cyclicals as well as defensives, and a sort of overweight towards the larger cap sectors. And we feel that this sort of balance between the cyclicals as well as the defensives, as well as the larger cap orientation of the tax saver fund, we feel that this will help weather the near-term volatility, at the same time also creating the sort of a platform for longer-term wealth creation as well.
So Roshi, very recently we have seen a good spike in the performance of HDFC Tax Saver Fund, which you in a way manages. And any key reasons on this turnaround stories?
So I think at a broad level, just following our investment framework and the process rigor, I think that has helped the fund to outperform. But if you want to go into a little bit more of details, I think we've done well both on sector allocation as well as stock selection. So we have seen positive contribution coming in from our stock calls in the financial space, the consumer discretionary space, the industrial space, healthcare, as well as the IT sector as well. But I would attribute the broader outperformance to our investment framework and process, as well as to the process rigor, as well as the research centricity of our fund construction.
Okay, so finally, one blindly any investor will look forward is per se a returns on an expectation what he can look forward while he put his money into that. Your 2 cents on that?
So I think I would only reiterate the point that generally equity market returns, as evidenced by historical returns also from the market, equity market returns are generally correlated to the corporate earnings growth. And we have a lot of drivers for corporate earnings growth, we believe, coming from a resurgence in manufacturing, coming from a pickup in private sector capex, coming from the household sector sort of witnessing an uptake, in addition to, of course, leverage levels both at the corporate as well as household level being reasonably healthy. So given the above, we are of the view that corporate earnings growth over the longer term will be fairly robust. And given that equity market returns have seen very high correlation with corporate earnings growth, we are of the view that this bodes well for longer term equity market returns. I would not want to give an answer in terms of the range of returns that one can expect. But I think investors can clearly form their own view by just putting together some of these data points that I've talked about, and looking at the kind of corporate earnings growth as well as the nominal GDP growth expectations over the longer term.
So Roshi, in a way, you have given us a nutshell, the broad understanding how the markets have shaped up in the last FI and even right now how the things are coming out. You gave your thought process on how the ELSS as an avenue can be one of the options to be looked up. And finally, you gave us the story behind the HDFC Tax Saver, whether the vintage and of course the turnaround. I'm sure all these data points will help an investor to make informed decision about the investment if they're looking forward for this particular fund. Thanks, Roshi. Thank you very much for sharing your thoughts. And I'm sure this will also be in the benefit of the investor while they hear you. Thank you very much.
Thank you very much for having me. And I look forward to the support of yourself as well as the investors. Thank you.
Sure. Thanks.
Please note, mutual fund investments are subject to market risk. Read all scheme-related documents carefully.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.